Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So today again we have prepared the weekly report where mostly we're concerned the recent CPI report and the noise that it has generated on the markets. So indeed was a very surprising moment that has led to significant action in markets, not only in the gold, in all markets across the board. And we're wondering concerning the effect of this consumer price index report, what could happen in the gold market in nearest term, how investors treat this report, whether the sentiment has been heard by this report, and what to expect in next week in general, in what direction we should follow our trade, and whether our short-term setup has been destroyed or maybe hurt by this recent report. So in general, by our analysis, it shows that, and then by the comments that we see on the market, it seems that the effect was mostly short-term. And the really bulk of this effect, while it was just short-term, stands thankfully to the Fed position. So Fed, once the CPI has been reported, said this is temporal. We do not see any inflation risk right now, and we will keep our interest rates low. So this is not sufficient effect on the market, sufficient data to start moving interest rates, or at least starts the preparation to that. And this rock-hard position by the Fed has brought the confidence to the market. Also, the later retail sales, as you know, were anemic on Friday, and together with the non-farm payrolls release, that will have overcome the effect of the consumer price index. And closer to the end of the week, market has turned back to the upward direction. So it means that probably markets relatively easy was able to swallow these negative numbers, although some fears have appeared in the market. But I think that the really 70 or 80 even % of this mitigated effect stands thanks to the Fed position. So when investors see that interest rates are low and they will remain low while inflation is rising, that makes the positive effect for the gold as well. So taking it all together, we think that we could keep going with our trading plan that they have prepared last week. And here's market our first part of our plan, which is short term, is coming to the final stage. So what does it mean? A market finally turns up, and we're aiming on the XOP 1853 target. It should be reached. That was our short-term setup. Once this target will be reached, we suggest that probably some deeper retracement could start, because that will be agreement with the confidence resistance and the major ABCD pattern on the daily chart. That theoretically should lead to the significant pullback. So this will be the second stage. Maybe we will get the first signs of these close to the end of the on the coming week. But first, let's focus on the XOP target on the upper direction of the gold market here. Why we think that it should proceed currently high? Well, because this price action that we see in the Thursday and Friday suggests that this is the continuation type of action compared to this previous action. So that was a retracement. Here was a reversal candle, by the way, and reaction on the CPI report. And this reaction already has been erased by the movement higher and taken out of this top. So in the current situation, appearing of another leg down looks absolutely irrational. So for the market, especially with the targets just few dollars above the current price, and where the previous reaction already has happened, we think that market could show retracement, but it should stay inside this most recent swing. So we do not interest currently with the levels that stand outside of the 18 or 7 area. these fib levels that could exist here, that is already for the next stage of our trading plan. While market stands aiming on the XOP, we're interesting only, at least in the beginning of the week, only with this most recent upper direction. Because pullback already has happened. On the way up, closer to the target, if market indeed stands bullish, there should not be any other pullbacks, except maybe, as I said, minor pullbacks inside of this most recent upward swing. That's our major idea. On the 4-hour time frame chart, you could see better that with this upward direction, market actually has erased the ABCD pattern that we have traded previously. So that was our entry level with this butterfly here on the hourly chart. So you remember that probably. And with this upward direction, market climbs above the C point. So in fact, the ABCD pattern already has been erased. So it means that we should not get any further downward action to the XOP, because the overall setup of this retracement is done. It's already destroyed by this upward action. So market actually has formed a kind of the bullish reversal swing here, which means that we're standing in a continuation of this type of action, but not a retracement of this downside action. So here on the 4-hour time frame chart, we do not have any specific patterns. I just provide you some extended fib levels tree that you could use in your trading and keep pushing for most important levels. So here we have 1816 most present, most nearest standing level, and following two confluence areas here and some natural support resistance line that agrees with the fib level. So currently no doubts that in the short term 18 even it will be the key level for the gold market. So keep bullish context, market probably has to stay above the 18 units. This will be important because market was challenging for a few times, and it's even psychological is very important, and from the technical point of view as well. But in the beginning of the week, where mostly we'll be watching for an hourly chart, take a look what here we could get. Here we have another ABCD pattern. It's butterfly, by the way. We talked about. It has the XOP 1852. Mostly stands in the same area as the daily. So daily approximately 1854. This one 1-hour chart XOP 1852. So mostly the same area. On the way down, the possible pullback that we could consider stands somewhere to the 1825. So these two levels market could use for a possible pullback. We also do not exclude the chance that market really could just proceed higher. That's also possible because market is not at every but. But still, if the pullback will happen, we're mostly considering two levels, 1830 and 1835. These two levels. Because market currently stands in a trading range between 1825 and 1845 approximately. So this is kind of the rectangle. So here was the barrier to return back in this trading range. Once market has broken through it, now it stands inside it. Now it's barrier to out of this range, as you can see. So an possible fluctuation here exists. Market could show some retracement. The pattern that theoretically we could get, although I'm not sure that we will get it, but it is possible. Take a look. We could get reverse head and shoulders on top. This sometimes happens, and in the modern market, we should not be surprised with that. We even have traded this similar several times already, as you know, in different markets. So take a look. That could be the left shoulder. In the case of the head, in the case of the market, will show retracement back to the 1830. That agrees approximately with the bottom of the left arm. Don't be deceived by this spike. That was first reaction on the CPI report. And mostly the major level here is 1827, 1825. So it stands very close to the 1830 confluence. So market with this downward action could reach an area around 1825, 1830. That will be the primary area to consider taking the long position if, in the case, if we will get this pullback, which I'm not sure that we will get it. So maybe we'll get just minor retracement and upward continuation because market already stands in an extension. When it stands in an extension, well, it tends to show minor pullbacks. Major pullback already has happened. Here's just minor pullback would be. So for dealing with this situation, I'm not talking about those who have traded gold last week and taken the position and the points that we have specified first here. Then we talked about this retracement here as well. If you would like still to take some scalp long position on the gold, aiming on 1852, As usual, you could consider few ways to act. First is the conservative approach, as usual. Wait for a deep pullback with around 1825, 1830, then considering taking the long position. Or you could use some compromise position, splitting your trading volume, taking, for instance, 30% of your position in the first level, 70% of the major level, and then so you will be prepared for a reversal and then traded by the two lots together. One thing that we do not want to see is, of course, black nasty candle for all the support areas. In this case, of course, we should not take any long position, something of that sort. We need to get a gradual pullback, minor retracement. If it will be gradual and accurate, slow, so that's what we would like to see, and probably that will be a chance to take the long position with the target around 1851. In general, guys, although I call it a scalp trade, if even we will get position 1835 till the 1851, it's still a significant range, so $16 per contract, so it's still significant action, and well, maybe it also makes sense to consider it for trading. Once the XOP will be will be touched, we will turn to the second stage and we'll watch first for reaction on 1854 daily target.